Hey, welcome back to YT Finance, and in this video we're going to be talking about stocks that have triple-digit potential to absolutely ignite your portfolio. I'm talking about stocks that can jump from $5 up to $38, or a stock that's $1 that can jump to $10, which would be a magnificent gain in the overall share price, making you very wealthy. So always make sure to do your own research before you invest into any such stock, because again, I want to make it clear, these are very risky companies, and we truly don't know what the future holds for these companies. However, I'm going to give you a rundown of each of them, and there's going to be 7 of them, and they can more than double your money in 2024, giving you triple-digit returns potentially. So with that being said, don't forget to go and annihilate that like button right now. Subscribe if you are new. Don't forget to become a member of this channel for as little as 99 cents per month, because that's what keeps me here on YouTube. And with all of that being said, I say let's dive right into today's stories. Starting off strong with Fastly, ticker symbol FSLY. And if you didn't know, this company could give you triple-digit returns in 2024. And this company is an edge cloud company. Essentially, Fastly offers businesses a wide array of solutions. However, it's best known for its content delivery network, also known as CDN, which moves content from the edge of the cloud to end users as quickly and securely as possible. The company is currently trading for approximately $17 per share, while on the lower end, analysts believe the company could fall to $11, while on the higher end, analysts believe it could surge up to $26. However, there are various experts who believe this company could surge by more than 100% in their overall share price. But first, let's go over a quick negative about this company. The big knock against Fastly has been their operating losses. However, they did recently hire a new CEO named Todd Nightingale, who is anticipated to rectify this problem. And let's talk about who he is, and this starts the very bullish perspective on this company. Fastly's new CEO, who is Todd Nightingale, was actually the executive vice president and general manager of Cisco Systems, specifically Cisco's enterprise networking and cloud segment. And Cisco is an absolutely phenomenal company, and this guy understands how to reduce expenses and generate positive cash flow. So he's going to take this company and move them toward reoccurring profitability, just like what he did at Cisco Systems. So this new CEO is tried and true, and it seems that the future trajectory of Fastly is going to be very impressive. If Fastly can reach reoccurring profits ahead of Wall Street expectations, it is a no-brainer that this company could surge by triple-digit values. And as long as the company continues to bring in key performance indicators, such as total customer count increasing, this is going to be a phenomenal candidate for triple-digit returns in 2024. Now let's move on to another stock called Novavax, ticker symbol NVAX, which currently trades for $5.29, even though very bullish analysts believe it could surge up to $38 per share. What's also interesting about this company is that even the bearish negative critics of this company believe this company is fairly valued at their current share price of only around $5. If this name sounds familiar, this is a biotechnology company that was involved in the creation of a coronavirus vaccine development, and this vaccine caused their shares to jump from $4 per share up to $300 per share, even though right now they are trading back at only $5. I also want to make you aware of, in this video, we're going to be talking about companies who have drastically decreased in their overall share price, making right now a great value opportunity and a great growth opportunity considering their future catalysts. So this company literally surged from $4 up to $300, and then it fell back to $5. And a lot of companies on this list have experienced a similar surge and then a decrease in their overall share price, but the author of this article believes that they could actually regain this overall momentum because there are multiple catalysts that are coming up for Novavax that could increase the share price by more than 100% during this year. Their first catalyst is their new development of a combination of the COVID vaccine with a flu vaccine, and they're anticipated to bring this to the market in the year of 2026, which should fuel excitement because historically this company's share price has surged once they released or even gave news about a new potential vaccine. Secondly, Novavax's aggressive cost-cutting campaign is taking effect right now, and this is a huge catalyst. The company is meaningfully reducing their overall operating losses. Management anticipates shaving off approximately $300 million off their annual expenses in 2024, which means that this company is on the right trajectory. But we also have a sweet and sour catalyst coming up. For instance, this company owes $700 million to Gavi, to where Gavi is seeking $700 million tied to Novavax's cancellation of their original agreement to purchase 350 million doses of the company's COVID-19 vaccine. So if Novavax avoids having to pay Gavi $700 million, this is going to release a lot of weight from their shoulders, causing the share price to absolutely explode. However, only time will tell if they will be able to get out of this. And for me personally, I would not be buying this company, even though it has huge upside potential, because it could surge from $5 up to $38. For me, I just don't know enough about this company, and I'm not comfortable investing into this company, which is why I'm also encouraging you to do research on any or all of these companies, especially if you find one that you really like. Next, let's talk about a company that I personally am buying, which is Fiverr International, ticker symbol FVRR. And we have a load of catalysts coming up for this company that could literally double your money in 2024 very quickly. If you didn't know, Fiverr International is an online services provider to where they operate an online marketplace that connects freelancers with businesses that need their services. So essentially, you can go on Fiverr if you have a very productive skill, and you can market your overall skill to people or businesses to where they will hire you for pay. This is like a side gig or a side hustle for many people, and some people have even been able to substitute their full-time income because they are making so much money on Fiverr. And I have this company as a buying opportunity in my regard. The company currently trades at $26 per share, while even the most skeptical critics of this company believe it's trading at a fair value of $26, which is their low-end price target. But their high-end price prediction, according to experts, is $43, so literally there should be only upside potential from here on out. Also, Fiverr looks poised to benefit from the recent shift in the labor force that has followed the overall pandemic, because a lot of folks are returning to the office, but some still work remotely. And for the people who still work remotely, a lot of them also simultaneously do an online side hustle through freelancing on Fiverr. Fiverr also has two comparative advantages according to their peers. For instance, Fiverr has freelancers price their services at an all-inclusive price, meaning that there is going to be no hidden fees or any costs that come up later. They try to make it as transparent as possible for people or businesses that are trying to hire a freelancer so they know exactly what it's going to cost them. The other great thing is that Fiverr has the best take rate, which is the percentage of money that each deal is negotiated at on their platform, which includes fees. And currently Fiverr takes approximately 31.3%, which is far more than their peers, which actually gives Fiverr an advantage because they are making way more money off of their platform. So overall, I would say this is a very intriguing company to look into, considering that they are already trading at lows according to professionals. Next, let's talk about Stoneco, ticker symbol STNE. The company currently trades for $17 per share, while very bearish analysts believe this company could fall to $9, and bullish analysts believe it could surge up to $23. And I currently hold this company, and that's the rating I give it. I give them a hold rating. Stoneco is another phenomenal company that could literally give you returns of 100% or more during 2024, and this is a fintech company. Stoneco provides an assortment of various payment, banking, and credit card solutions to businesses in Brazil, which is a very good developing market. Now, to quote straight from the article, what makes Stoneco so attractive is its evolution as a business. Whereas the company had primarily been focusing on small businesses and micro merchants, it's expanded its solutions to also target medium-sized businesses, which are likely to move its profit needle. So in many respects, this company's total payment volume is anticipated to literally explode. We are only seeing the tip of the iceberg for this overall company, and if you like fintech companies, then this company should be on your radar. You should also be aware that this company has a double-digit sales growth for their overall projections, and their adjusted earnings growth is on track for 2024, making this a phenomenal investment opportunity. But as always, make sure to do your own research. Next up, let's talk about PubMatic, ticker symbol PUBM, and this is an ad technology stock. So essentially, this company would be competing with the Trade Desk. They are both ad tech companies, but PubMatic seems to have an interesting cutting edge. For instance, their share price is already trading at a low of $15. And what do I mean by that? When I say low, I mean even the most critical analysts and experts of this company believe it's trading at a very low valuation, making this company not only a value prospect, but also a phenomenal growth stock, because experts on the higher end and professionals believe it could surge up to $21, which may not seem like a lot of growth, but trust me, the sky is the limit for this company. PubMatic operates a cloud-based ad platform for publishers. So in simple terms, it's a sell-side platform, also known as an SSP, that helps publishing companies sell their digital display spaces. In essence, this is an advertising company essentially, and it's worth noting that in 2024, this is an election year, and based on projections, we know that during election years, paid advertising absolutely explodes, and according to the advertising agency Group M, political ad revenue will near $16 billion in the United States this year, which would represent a 31% increase, which is amazing. So right now would be a great time to invest into companies such as PubMatic as well as The Trade Desk. PubMatic also just happens to be at the center of a fast-growing aspect of digital advertising because they have various avenues that infiltrate mobile, video, and connected TVs. So overall, PubMatic seems very strong, and perhaps the biggest advantage of this company is that they designed and developed their own cloud-based infrastructure, meaning that they don't need to rely on third parties, which is going to benefit PubMatic's bottom line in 2024, and overall, I have a hold rating for this company. Up next, let's talk about that company that I mentioned in the beginning, a company that can surge from $1 all the way up to $10. Currently, they're trading for around $1.58, while very bearish negative analysts believe this company should be trading at around $1.40, while others believe it could surge up to $10 like we talked about earlier. And this company is none other than Lexicon Pharmaceuticals, ticker symbol LXRX. Lexicon is a small cap biotechnology company that is swinging for the fences because they have multiple catalysts that could give investors triple-digit returns. Literally, you could almost 10x your money, meaning that if you invested $1,000, you could potentially make $10,000, or if you invest $10,000, you could potentially make $100,000. But let me tell you, this company is hyper risky, and I can't stress that enough. And here's why. The share price of Lexicon Pharmaceuticals was decimated in 2019 after the US Food and Drug Administration, also known as the FDA, rejected a treatment for patients that Lexicon Pharmaceuticals was trying to get to market. However, the good news is that in May of 2023, the FDA approved a pharmaceutical from this company to treat or at least reduce the risk of heart failure in patients with diseases such as type 2 diabetes, chronic kidney disease, and other cardiovascular factors. And this pharmaceutical is capable of generating $500 million in annual sales by 2028 onwards. So this is clearly noteworthy. And without getting too much into the science, feel free to read this article for yourself and do your own research. This company is also approving their therapy, which is the only SGLT1 and SGLT2 inhibitor on the market. The SGLT2 inhibitor blocks glucose absorption in the kidneys, and the SGLT1 inhibitor blocks glucose absorption in the intestines. And since they are literally the only company that has this approved on the market, it gives them a huge competitive advantage. So feel free to look into Lexicon Pharmaceuticals. Last but not least, let's talk about Match Group, which I have a buy rating on. This company is trading for only $35 per share, and it could surge up to $55, while other analysts believe it could literally jump to $70 per share. And considering that the low-end price target for this company is $30, they're already trading on the lower end. Match Group, ticker symbol MTCH, is a phenomenal stock to hold in your portfolio that, according to this article, can double your money in 2024. You should be aware that Match Group has already taken their shareholders on a wild ride throughout the recent years because the company has literally surged up to $150 per share at one time. But since then, the company has come down substantially in price, which gives investors a good buying opportunity in my opinion, because this company is firing on all of their cylinders. For instance, in September, it introduced Tinder Select, which is a small percentage of its overall users. And this exclusive subscription will set users back $499 per month for this overall subscription on their dating app. And if you didn't know, Match Group owns a plethora of various dating apps, which would include Tinder, Hinge, OkCupid, and Match.com. So they are a market leader and they dominate. It's almost like they have a monopoly over the dating place. In addition, Match Group has not been shy about increasing the prices of their subscription, which has helped their bottom and top lines. Though they lose a small percentage of subscriptions once they increase the price, this has positively impacted their revenue by double digits. For instance, once they increased their prices, their revenue per payer rose by 15%, which really helped them out. You should also know that Match Group has plenty of opportunity to further expand overseas. They are already pretty popular in the United States with the dating apps that I mentioned earlier, but their dating app Hinge is delivering exceptional results over in Europe. So this means that there is huge opportunity globally for this company because they are a online dating juggernaut, and that's why I have a buy rating on this company. So I'd love to hear your thoughts about Match Group, Lexicon Pharmaceuticals, PubMatic, Stoneco, Fiverr International, Novavax, as well as FSLY. With that being said, don't forget to go and annihilate that like button right now. Subscribe if you are new. Don't forget to become a member of this channel for as little as 99 cents per month because that's what keeps me here on YouTube. And with all of that being said, I will see you in the next YT video.